Hey everyone, welcome to today's episode. Today we are going to talk about first time home buyers and what to look for when you're buying home for the first time. All right, this is a slide for the channel. It has my contact details in case you have any questions. Feel free to comment or email. Okay, so uh, the first point to consider when you're buying home is who is buying. Are you buying for yourself? Are you buying with a spouse? Are your parents helping you? Right? Think about long term on because house payments, which are usually taken on borrowed money, are very long term payments, right? So you want to think really long term in terms of however is your engagement with the person or people you're buying a home with, right? So think long term. Second is check both your credit scores. See if it makes sense to buy individually rather than separate. Because if your credit scores are too different, it can change the way you may be able to borrow money, right? Think financially to see how it makes sense, right? So that's the first thing to understand who is buying, right? Next, Okay. Next, what you want to understand is what type of home you are going to buy. Are you going to buy a condo or are you going to buy a townhome? Are you going to buy a house? Um, are you going to buy a lot and then build on the same? All these work differently in finance for maintenance and for lifestyle. So you want to think through it really well. So for example, if you buy a condo, they might have high HOA fees. They're like $100 $200 a month, right? But on the other hand, there is a lot less maintenance. Like you usually just maintain the internal, and all the external roof, etc., are taken care by the a condo complex or the HOA or the home owners association, as you call it, right? So and then there are some other caveats in terms of how good the HOA is, etc. So you want to be mindful of that. If you are buying a house, usually there is no homeowners association fee or low homeowners association fee, right? But then usually the maintenance falls on the house owner. So for internal, external, everything, there's more to maintain. However, it gives you more space. So there are caveats like that which you want to think about when you're buying that. Again, I mean, like the common things, like if you're buying a condo or a townhome, there is somebody right above your place or below your place or right next to your wall. That is not the case in the house. So those are the factors you want to consider. I can try to make a separate video on that later, but this is just to trigger your thoughts and give you some ideas to think about. So let's go to the next slide. Okay. Next is prepare. So first thing to prepare is check your credit score. If it is low, then what might happen is you might end up getting higher interest rates for the house. That means, and whatever kind that is, right? Whether it's a condo or a house, doesn't matter. But if your credit score is low, then you will end up getting higher interest rate, and that means over a period of time you will end up paying large sum of money or larger sum of money as compared to a better credit score. So consider if in the point in your life it makes sense to build a better credit score before you are actually going and looking for a house to buy. If you are younger, this makes even more sense than when you are, post 30s. But so if you are younger, you might have a little more time to work on your credit score first before you actually go in and apply for the loans for the house, etc. So work on your credit score. Okay. Next is understand what you can afford. So usually it is said that one third of your yearly income can probably go towards home. However, I would say apply your common sense. Try to understand what you take home as a net after paying all the taxes, right? So what you get from your employer. how steady it is. Are you going to get it week on week or month on month? Or is there a possibility of fluctuation, right? So you want to consider it and then plan accordingly. Second, apply really basic maths, really common sense, which you would be surprised a lot of people don't think of it. But think that if you have, if your weekly take home is, let us say, $400, and first try to subtract your basic living expenses. So I would say if your living expenses are, out of $400, your living expenses are $150, right? Then you only have $250 left. Now, from this $250, I would say, consider your, for example, your car payment, right, which you already might be making. Consider your student loan payment, which you already might be making. So take that out. Keep aside for your weekly groceries. Keep aside for your emergencies fund. And after that, whatever amount you get, I would suggest even reduce maybe 10% on that, and whatever is left, try to get your home loan in such a way, or home mortgage in such a way, that you end up paying that amount or less for your home. And that is a better way to uh, plan long term. um, on a little bit side note, which you see on the bracket at the bottom, I mean, if there is an emergency, note that many banks would, or many mortgage lenders would entertain holding you to make a payment for 1 or 2 months. But again, do not bank on it. So that's just a side note. Let's go ahead. Next is execute. So now that once you're prepared, you've done your credit score, you've got a better score and all that, and you've understood what you can afford, then we execute. So first is what we need to do some groundwork before we actually reach the broker or an estate agent to search, right? And what you can do is you can search houses for yourself by going to Zillow.com or some similar websites like that. Now, what you want to understand when you're buying a house is what kind of location are you going to buy your house in, right? How is the school zone? Um, Even if you do not have kids, you want to consider this because it will matter when you, and if you eventually decide to sell the house, right? Even though you do not plan on selling the house, it is always better to plan it in such a way that in case an emergency comes and comes to shove, you are better positioned to make a easier move if that had to happen. So consider the location, consider the school zone. I would suggest mark a few houses you like, and make a kind of short list, right? And then for each house you like in that list, try to look for the houses, or the houses which have been sold around it, just neighboring very similar ones in the recent time. You can do this using Zillow yourself. And what this gives you idea is the price at which you are going to or about to offer for the house. Is it in the range, or are they asking too much? So this is something which you can do yourself before even you think of approaching broker, right? Also, websites like Zillow would offer you um, check when the house was last sold and at what price. So it shows you historical prices. Also, what it shows you, that what is this house evaluated for the tax purposes. So for example, house might have been last sold on at $30,000, but the tax evaluation might have been $40,000. So that means even if the asking price of the house is $30,000, the tax is being taken by the state or the city county at $40,000, which is slightly more than what you would have paid for $30,000, right? So you want to keep these things in mind when you're making your decision. Next is reach for the broker. So once you've done your groundwork and you have shortlisted the houses, right, you can reach the real estate agent. Technically, you can even reach before it, and you can ask broker to show you the houses, but they are not always the best list. They might, put you on some automatic filter and it will start sending you mail as per your choice. But it is always better to be proactive and do your own research before all that starts. Also, it might end up happening that you might be able to close these kind of deals directly in case there are some houses which you see and they're for sale by owner. You can directly think of dealing with owner and save the broker's commission. um, Although, I mean, there are certain advantages of going with broker as well. And as a buyer, you would not directly end up paying the broker's commission. Usually, the seller pays the broker's commission, but at least that is something to keep in mind. So, I'm not saying I'm not trying to push you to incline in either way, doing yourself or doing through broker, but at least it's good to know that there is one other way possible. Right. Reach the agent which is licensed in the state you are in, and they can show you houses in your list. I mean, if you have already prepared and done the groundwork, they might be able to. It might be easier for them to, take you to the house and show you. Now, usually, as far as the agent is licensed in the state or the location you are in, they can show you any house. It is not one agent per house. If you are a buyer, your agent would be able to practically show you all the house in your list as far as they're licensed in that state. Um, so, and again, I mean, repeat this process till you're happy. Try to go through all the houses which you have listed. Be open to if anything they want to show you more or anything which comes along the time, right? Prepare a short list of few houses you liked and prioritize them. Now, once you have this shortlist ready, try to visit those places before you make an offer, right? Try to visit those places at different times of the day to get a feel. Different, sometimes during the weekdays, sometimes during the weekends, sometimes during morning, afternoon, right? Other good idea is to hang around in local coffee shops or bars around these houses. Try to get a local feedback, right? And then try to narrow your shortlist even down from maybe five or six to two to three, right? So this is just to give you an idea of how things are. Again, there is no segregation allowed, so you should not base your decision based on any preconceived notions. But a fact check always helps. So that's all I'm suggesting. Always try to comply or community all community norms and proceed legally. Now, next is before while making an offer. Now, after you have studied the house, make sure to look for price for similar homes in the really close by neighborhood for similar size for the recently sold homes. Now, your broker, if you have hired one, would ideally do it, but it is always good to do it yourself. It will give nobody is going to care for your money as much as you are, right? So it would always be good to make a educated decision, and it will also make put you in a better position to negotiate it better. Look for the history of price and the tax valuation as I mentioned below. So if the house is listed for 50,000 and the tax valuation has been done on 40,000, you can always argue that the tax evaluation is lesser, so I want to negotiate for a lesser amount when I try to make a purchase. um, I would suggest do not make a full offer even if you feel the price is right and everything is wonderful, right? Still try to make a slightly lower offer, and it is fairly possible that the house owner or the seller might, match what you're asking, right? Be respectful when you do that. Be mindful in that other people also may make an offer. If you really, really want it, you may have to let the house go because you made the less offer. However, I think people get the best deal when they do not want it as bad, right? So that's my theory and my view on it. I'll leave more up to you. Uh, Next is yeah, another thing which you probably want to notice and you might be able to find on Zillow or other websites like that is how many days the house has been listed, how many times the drop the price in this time, right? So if the house is listed for just 2 days, you might not be able to get away with a smaller or lower offer. But if house has been listed for, let's say, 335 days, right? In that case, if you make a lower offer and house owner really wants to sell the house, very likely your offer will be considered. Okay, let's go ahead. Next is offer acceptance. So basically, when the seller accept once the seller accepts the offer, there are certain steps which, at the time of just making an offer, often the buyer is not aware of. Usually, you after the seller accepts the offer, those are conditional acceptance. It allows the buyer, which would be you, to get the house inspected professionally. It costs extra, and you have to pay around $200 to $600. And basically, uh, you can get the various types in inspection. So one is generic inspection, like they would check everything in general, electricity, plumbing at high level, and so on. Then there is a different inspection for radon gas inspection, which are kind of toxic gases, and in certain areas it is good to have that inspected. Then there is lead inspection for paint. So if the house is old, if they have used lead paint, then you rather have it inspected to avoid those situations. And second, another one is termite inspections, right? So there can be various findings on this inspection, and when the inspection report comes back, and usually those are written reports and very detailed reports, you can ask the seller to get those fixed. Now, seller is not obligated to get those fixed, but I mean, often they do get these things fixed. And also, if they do not get these things fixed, they might be able to bring the price down when you do that. Um, you do reserve as a buyer, you would reserve a right to renegotiate or deny if you're not okay with the house after this inspection. So for example, if there is a crack in the foundation of the house, you may be able to say no at this point in time. Now, make sure that when you are making an offer, it does state that this condition for inspection, that you would reserve a right to inspect and deny if you're not happy, right, or negotiate. Usually, all the brokers which would offer these things have uh, have these standard clauses. Now, the other thing which I have not listed on the slide here, but I wanted to talk about, is in addition to inspection, there is also something called as appraisal. So when you basically apply for the loan, kind of not that is when that would happen in bank, or whoever is lending you will try to send somebody to appraise the house, which costs, depending on where you are, but around $500. And they would try to evaluate the house. So for example, if the house was for $50,000 and you're willing to pay it, and you're going to borrow for, let's say, $45,000 for it, then the person who is going to give you this $45,000 would try to see, is the house really worth $45,000? If yes, then they will go ahead and give it to you. If not, then they may deny the loan, right? But it is good in your favor to do it, to ensure that you are not overpaying. So next is negotiation. So once you have done this inspection, and hopefully by that time you would have also applied for loan, and got this appraisal done. So based on all these inputs, you can negotiate. Try to ask the seller to give you better price or get things fixed, etc. Another thing which you need to consider when you're trying to negotiate is what you see on the slide, which is you can ask seller to pay some closing costs. So whenever you try to buy the house, there are some closing costs involved, which are, some costs are more appropriate for seller, which is like the next 1 year's taxes are taken in advance and so on. But then there are also other closing costs, like some documentation fee or closing fee or title company fee, etc. That is something which you can negotiate and ask the seller to pay instead of you paying as a buyer. um, Next is you can always negotiate for getting issues in the house, getting appliances fixed, or getting new appliances, right? Another thing which you can do is you can ask the seller to provide you guarantee on all the appliances, heater, etc. Usually these are available in market for around $600 a year, and sellers can buy these and pass it on to the buyer. And these guarantees would cover your all your major appliances, heaters, etc. for around a year. There are different companies which provide that, and you can either suggest or let the seller decide on which one would you want, right? So look it up online and try to ask it when you're buying the house. Another thing you can negotiate for is your moving dates or closing dates. So basically, this will help you that in case you're renting right now and you're going to buy a house, you buy a house with a closing date in such a way that you have uh, no rent to waste, because most places where you might be renting might have 2 3 months as a notice period, right? So if you put your closing date and move-in date in such a way that these are as also 3 months away, then you would ideally have enough time to move out of your existing rental place. So keep this in mind when you're negotiating and try to think around or work around with these. Next is loans and borrowing. So basically, this will kind of start as soon as you make the offer on the house, right? And basically, uh, though so these are some points which we want to consider. So though it often ends up the case, buyer does not have to borrow from the lender who had pre-approved the buyer. So I think we discussed earlier, but if not, when you're trying to get prepared for buying a house, one thing which you can do is you can get pre-approved from a lender. That means they will do a background check on your credit score, and then they will pre-approve and they will tell you that okay, you can go ahead and buy a house worth $50,000 or $60,000. That is what you can. That is what they will let you borrow, right? So let's say if you got pre-approved from a lender A or a bank A, it does not mean you have to borrow from the same lender. Though that happens to be often the case, you do not have to do that. I would suggest a buyer to reach out to at least 3 or 4 different lenders, which can be banks, credit unions. So there's something called as mortgage brokers who would basically negotiate with different lenders on your behalf, right? And then try to find the best deal suitable. The lower the percentage, the better it is. The loans are usually available in 10 years, 15 years, and 30 years if you go for conventional loan. Most people end up taking the 30-year loan, which gives you the best monthly payment plan or the lowest monthly payment plan, right? So I would suggest try to take a similar combination quote from every bank. So if you're trying to take 30 year from one bank, try to take 30, or lender, try to take 30 years quote from each and every one, and then try to compare them and see what. Do not, I would suggest not going with the first person who gives you the loan, but try to at least get 2 to 3 quotes and compare them, right? Often be prepared that 5 to 20% of down payment is required. So, for example, if you're buying a $50,000 house, you might have to pay $2,500, which is 5% of the down payment, to around $10,000, which is 20% of the down payment, right? So be prepared with that amount. Plus, there might be some additional expenses, like they might ask you to pay 1 year's tax in advance. So, be prepared with, I would say, between at least, I would say, around 10% of the house cost to 20% of the house cost, to so that you can pay them while you're buying the house as down payment, right? So that money should be available in your bank. Now note that many states offer a first time buyer home incentive, and which usually gives you around $5,000. So google that, check that out, and that might help you, right? So once the seller accepts the offer, you can get the house inspected professionally. Yeah, the inspections can be various type, and at the same time you can negotiate for this loans, etc. Right? So that's how the process usually flows. Uh, the finances. So there's something called as escrow, and many people find it confusing. Note that whenever you make an offer, uh, from this 5 to 10% advance they take, usually some amount they will take for 1 year's taxes or HOA or homeowners association fees in advance, and they will put in a some account called as a escrow account. This account is basically neither the bank's account nor your account. It is basically account in between, which will hold this money on your behalf. It kind of gives guarantee to the lender that you are going to pay this taxes at least for next 1 year. And it's also a peace of mind for you that you don't have to go to different authorities. Um, Depending on your credit score, finances, and how much down payment you are making, sometimes buyers are allowed to not to have an escrow and directly pay to the tax authority of some kind. So you can find it out. I personally would find it probably easier to do an escrow account. However, note that there may be slight fees associated with it, so keep that in mind. Um, what else? Yeah, so note that you might also be asked to get a homeowner's insurance, right? Flood or hazard insurance, depending on which zone your house is in. This may be required. So provision for these amounts on a monthly basis. Also note that depending on which state, city, county you are in, there are around 1% of the house value tax as a property tax to be paid to the state, county, and city authorities, 1 to 2%. So make sure to provision that. That is what would usually go in your escrow account. But what happens, and the reason I'm stating it here, is many home buyers do not realize it, and when you're trying to compare, living in the house cost with your rental cost, you need to keep in mind the insurance which you would have to pay for a owned house, a flood insurance or any additional insurances like that, the taxes on house, and the maintenance of the house. So you have to take in account the loan or mortgage amount which you'll be paying to the lender, plus all these expenses, and then compare it to the rental place you might be living in it right now. Also, depending on what kind of house you are in, there might be homeowners association or HOA fees. Now, usually these are not collected by the lender. These are collected by the respective homeowners association. So that would be over and above which you will have to pay. So be very mindful and aware on this. Let's go to the next one. Closing. So usually when everything is okay, your loan is secured, etc. There is a closing date, right? So let's say you make an offer on month one. The closing might actually happen in month two or month three, because in between all the inspections are done, or basically this loans are arranged, and all the arrangements are done, and that is when, if you see on Zillow or the websites, the house is shown as pending. So when everything is ready, and we are ready to conclude and move in, there is a procedure called as closing. So basically, there will what they will do is they will call you to the house and usually arrange for a walkthrough and make sure you get it, to ensure that anything which you had pointed out in inspection is fixed, and there is nothing changed in between the just before the moving in and while you had seen the house a month or two back. So that is kind of a walkthrough is done before closing. So make sure you arrange that and get that. Next is, on the day closing is decided, usually buyer, which would be you, the seller, and somebody called as the title agent would ideally meet to sign the document. So this title agent is somebody who is different than the the person who you are borrowing the money from. These are the people and team which specializes in closings of the house. They are the people who would be helping you with your escrow account and all the documentation. So you would meet in one of the estate agent's office or the title agent's office or the house, depending on how that is decided, on if you are using estate agent. And then you would basically sign the document. You would be asked to either wire the funds during this very day, or in certain cases, if you are giving check or draft or something, that might be a day or so early. But most cases it happens on the same day you are asked to wire the funds. Hold on. Yeah, I mean, the also the cases may be that uh, the sell as a buyer, you would have wired the fund to the title agent probably a day or two in advance. Title agent would have prepared the checks for the seller and the estate agent, etc., and they will come ready on the date to hand them over those secured checks. So yeah, so on the day of the closure, buyer, seller, title agent would meet and sign the document. You will exchange the key, exchange the dollar amount, right? Um, so that's what happens on the closing day, and that is when as a buyer you would get the key. I would suggest and recommend that change the lock as soon as you move in. That is because even though intent may be the best from the seller, the keys might have been given to some friends and they might not even remember it, right? So it's always safer as a buyer for you to get the lock or the key changed. You can also negotiate with the seller. That seller would pay for it, right? And these are not usually expensive thing, maybe as compared to a house, maybe 100 or $200, but would highly encourage a buyer to do this. uh, I guess, yeah, that's pretty much on closing. uh, yeah, I mean, make sure to get all the documents on this day from the agent and seller, whatever are applicable. Make your photocopies. You would also be signing certain documents, so try to ask and keep the copies of whatever you signed as far as possible. That's pretty much on closing. Let's go to the next slide. So yeah, that's pretty much. Congratulations, the process is now complete. You would now be owning the house. That's pretty much. These are the couple of few points I wanted to discuss to give you some insight and idea as a first-time home buyer. I hope this helped. I have a YouTube channel. I would request if you would consider to like, subscribe, and comment. Give me your feedback. Um, that's pretty much. And as a disclaimer, note that I am not a certified financial advisor, a broker, a estate agent, or associated uh, with this in any professional capacity. This is just done with my best intent and just for entertainment purpose only. Though my intent is best and I have stated everything to best of my understanding, it is possible that I have made mistake. So I I would not accept any liability from this. So do your due diligence and validate before you execute, and consult somebody who is certified. However, I hope this was a good general overview and it helps you for your buying your first home. Good luck and have a wonderful day.